Solved problems. Accounting cycle. Transactions. General journal. T accounts. Adjusting entries. Adjusted trial balance. Income statement. Retained earnings statement. Balance sheet. Post-closing entries. Post-closing trial balance. Accounting cycle practice problem. For the past several years, John Adams has operated a part-time business from his home as of April 1, 2002. John decided to move to rented quarters and to operate the business, which was to be known as Adams and Family Inc. on a full-time basis. Adams and Family entered into the following transactions during April 4. The following assets were received from John Adams: cash 10,000, accounts receivable 1,500, supplies 1,250, and office equipment 7,500. There were no liabilities received. April 4. Paid 3 months rent on a lease rental contract 4,500. April 4. Paid the premium on property and casualty insurance policies for the year 1,800. April 6. Received cash from clients as an advance payment for services to be provided $3,000. April 7. Purchased additional office furniture on account from Mr. Morrilton Company 1,800. April 8. Received cash from clients on account 800. April 11. Paid cash for newspaper advertisement 120. April 12. Paid Morrilton Company 800 for debt incurred on April 7. April 15. Recorded services provided on account for the period April 4 to 15, 2,250. April 15. Paid part-time receptionist for 2 weeks. Salary 400. April 15. Recorded cash from cash client for fees earned April 4 to 15, 3,175. April 18. Paid cash for supplies 750. April 22. Recorded services provided on account from April 18 to 22, 1,100. April 22. Recorded cash from cash client for fees earned April 18 to 22, 1,850. April 25. Received cash from clients on account 1,600. April 27. Paid part-time receptionist for 2 weeks. Salary 400. April 28. Paid telephone bill for April 130. April 29. Paid electric bill for April 200. April 29. Recorded cash from cash clients for fees earned April 25 to 29, 2050. April 29. Recorded services provided on account for April 25 to 29, 1,000. April 29. John received 4,500 from the company as his salary. Required. Record the transaction journal form. Post the transactions to T accounts. Record and post the following adjustments. A. Insurance expired in April 150. Supplies on hand April 29, 1020. Depreciation for the office equipment in April $500. Accrued receptionist salary on April 30, $20. Rent expired in April $1,500. Earned 2,000 of services that were previously paid for on 6th April. Prepare an income statement, statement of retained earnings and balance sheet. Record and post closing entries. Prepare post closing trial balance. General journal. In the books of Adams and Family Inc. Date particulars, ledger folio, debit, credit. April 4. Cash account debtor 10,000. Accounts receivable debtor 1,500. Supplies account debtor 1,250. Office equipment debtor 7,500. 2. John Adams capital 20,250. Being the assets received from John Adams. April 4. Rent account debtor 4,500 to cash account 4,500. Being the 3 months rent paid on lease. April 4. Insurance account debtor 1,800 to cash account 1,800. Being the property insurance premium paid for the year. April 8. Cash account debtor 3,000 to unearned income. Advances from clients 3,000. being the advance payment received from clients. April 7, office equipment debtor 1800 to accounts payable Morrilton Company 1800, being the additional office furniture bought on credit. April 8, cash account debtor 800 to service revenue 800, being the cash received from clients for the services rendered. April 11, advertisement debtor 120 to cash account the credit 120, being the amount paid on advertisement. April 12, accounts payable debtor 800 to cash account 800, being the amount paid to Morrilton Company. April 15, accounts receivable debtor 2250 to service revenue 2250, being the service revenue recorded. April 15, salaries account debtor 400 to cash account 400, being the receptionist's salary paid. April 15, cash account debtor 3175 to service revenue 3175, being service revenue received in cash. April 18, supplies account debtor 750 to cash account 750, being cash paid for supplies. April 22, accounts receivable debtor 1100 to service revenue 1100, being the service revenue recorded. April 22, cash account debtor 1850 to service revenue 1850 credit, being the services revenue recorded. April 25, cash account debtor 1600 to accounts receivable 1600 credit, being cash received from the clients. April 27, salaries account debtor $400 to cash account $400 credit, being the part-time receptionist salary paid. April 28, telephone expenses debtor 130 to cash account credit 130, being the telephone bill paid. April 29, electricity expenses debtor 200 to cash account 200 credit, being electricity bill paid. April 29, cash account debtor 2050 to service revenue 2050, being the service revenue received in cash. April 29, accounts receivable debtor 1000 to service revenue 1000, being the services rendered on account. April 29, salary to John debtor 4500 to cash account 4500, being John's salary paid to him. Now let us record the adjustment entries. Adjustment A, prepaid insurance debtor 1650 to insurance expense 1650. B, supplies on hand asset debtor 1020 to income and expenditure account supplies 1020. This is closing stock. Adjustment C, depreciation debtor 500 to accumulated depreciation account 500 credit, being the depreciation on office equipment for April. Adjustment D, salary expenses debtor 20 to outstanding salaries 20, being the salary outstanding to the receptionist. Adjustment E, prepaid rent debtor 3000 to rent expense 3000, being the rent expired recorded. Adjustment F, unearned income 2000 to service revenue 2000 credit, being the services provided on the advances received. Now let us prepare T accounts. Accounts payable account on the credit side 1800 on April 7, and we have paid on April 12 800. The balance 1000 is the credit. Accounts receivable April 4 1500, April 15 2250, April 22 1100, April 29 1000, and we received 1600 on April 25. So net balance debit in accounts receivable account is 4250. Accumulated depreciation account on the credit side, adjustment C 500. So closing balance 500 credit. Advertisement account April 11 120. So debit balance 120. Rent expense April 4 4500 we paid, and 1500 only expired. So 3000 we have to credit from here, and the balance rent expense is 1500. Depreciation account adjustment C, debit 500, debit balance 500. Electricity expenses April 29 we paid 200, so debit balance 200. Outstanding salaries 20 credit balance. Closing stock supplies 1020, adjustment B, closing balance 1020. Insurance expense April 4 1800. On the credit side 1650 adjustment A. So debit balance 150. Telephone expense April 28 130. So debit balance 130. John Adams Capital April 4 20,250. Credit balance 20,250. Office equipment April 4 7,500. April 7 1,800. Total office equipment 9,300. Unearned income April 8 3,000. Adjustment F less 2,000. Unearned income by the end of the month is 1,000. Credit balance. Prepaid insurance 1,650. So balance 1,650. Prepaid rent adjustment E 3,000. So debit balance 3,000. Supplies on hand asset 1,020. 1,020 debit balance. Salaries account April 15 400. April 27 400. Adjustment D outstanding salaries 20. Total salaries debit balance 820. Salary to John April 29 4,500. Debit balance 4,500. Supplies account April 4 1,250. Additional supplies bought April 18 750. Total supplies 2,000. Service revenue April 8 $800. April 15 2,250. April 15 3,175. April 22 1,100. April 22 1,850. April 29 2,050. April 29 1,000. Adjustment F 2,000. Total service revenue received 5,050. Cash account April 4 10,000. April 8 3,000 debit. April 8 800 debit. April 15 3,175 debit. April 22 1,850 debit. April 25 1,600 debit. April 29 2,050 debit. On the credit side April 4 4,500. April 4 1,800. April 11 120. April 12 800. April 15 400. April 18 750. April 27 540. April 28 130. April 29 200. April 29 500 being the net profit transferred to retained earnings account. Cash balance remaining at the end of the month is 8,875. Adjusted trial balance. Adjusted trial balance as on 30th April. Cash account 8,875. Accounts receivable 4,250. Prepaid insurance 1,650. Prepaid rent 3,000. Supplies on hand debit 1,020. Office equipment 9,300. Accumulated depreciation account credit 500. Accounts payable credit 1,000. Outstanding salaries credit 20. John Adams Capital 20,250 credit. Service revenue 14,225 credit. Unearned income 1,000 credit. Income and expenditure account supplies closing balance 1,020. Supplies account debit 2,000. Salaries account debit 820. Salary to John 4,500. Rent expenses 1,500. Insurance expenses 150. Telephone expenses 130. Electricity 200. Electricity $200. Advertisement $120. Depreciation $500. Total debits 38,015 and total credits 38,015. Income statement. Income statement for the month of April. Debit side, credit side. Debit side all expenses are recorded, on the credit side all incomes are recorded. On the debit side, to supplies account 2,000, to salary account 820, to salary to John 4,500, to rent expense 1,500, to insurance expense 150, to telephone expense 130, to electricity charges 200, to advertisement charges 120, to depreciation 500. On the credit side, by service revenue 14,225, by closing stock of supplies 1020. So total income is equal to 15,245. When we balance the account, there is a difference of 5,325. It is transferred to retained earnings. Statement of retained earnings. Service revenue 14,225. Unearned income 1,000. Income and expenditure supplies account. Closing stock 1020. Total income 16,245. Less expenses. Supplies account 2,000. Salaries account 820. Salary to John 4,500. Rent expense 1,500. Insurance expense 150. Telephone expense 130. Electricity 200. Advertisement 120. Depreciation 500. Total expenses 9,920. Retained earnings 6,325. 16,245 minus 9,920. 6,325 is the retained earnings. Balance sheet. Balance sheet as on 30th April. Liabilities amount, assets amount. Cash account. On the asset side, cash account 8,875. Accounts receivable 4,250. Prepaid insurance 1,800 minus 150, 1,650. Prepaid rent 4,500 minus 1,500, 3,000. Supplies on hand, closing stock 1020. Office equipment 9,300 less accumulated depreciation 500, 8,800. Total assets 27,595. On the liability side, accounts payable, marital company 1,000. Outstanding salaries to the part-time secretary $20. Unearned income 1,000. John Adams capital 20,250. Retained earnings from income statement 5,325. Total liabilities 27,595. Closing entries. April 29. Income statement 9,920. Debtor to supplies account 2,000. Salaries account 820. Salary to John 4,500. Rent expense credit 1,500. Insurance expense 150. Telephone expense 130. Electricity expense 200. Advertisement 120. Depreciation 500. Being all expenses transferred to income statement. Date April 29. Service revenue debtor 1,425. Closing stock of supplies 1020. Debtor to income statement 2,445. Being all incomes transferred to income statement. Posting closing entries. Depreciation. We have 500 debit balance. To by income statement 500. We close the account. Advertisement. We have debit balance of 120. By income statement credit 120. We close the account. Service revenue. We have total revenue of 5,050. To income statement. We close the service revenue account by transferring it to income statement. Closing stock supplies. We have closing stock of 1020. We debit the closing stock account 1020 and close the account. Electricity. We have an expense of 200. We close this account by transferring this to income statement 200. Salaries account. We have total salary of 820. We transfer this to income statement by income statement 820. We close the account. Insurance expense. We have an expense of 1,800 total and expired is 1,650. So we transfer 150 as an insurance expense and close the account. Insurance expense. We have a balance of 150 and we close the insurance account by transferring this to income statement 150 credit insurance expense account. Rent expense. We have a rental expense of 4,500. Income statement account and close the account. Supplies account. We have 2,000 as a supplies. We transfer the supplies to income statement by crediting supplies account 2,000 and close the account. Salary to John. We have paid 4,500 salary to John and we close this account by transferring this to income statement 4,500 crediting salary John account. Telephone expenses. We have incurred 130 as telephone expenses. We transfer this expense to income statement by crediting telephone expenses account by income statement 130 and close the account. Post-closing trial balance. Post-closing trial balance as on 30th April. Cash account debtor 8,875. Accounts receivable debtor 4,250. Prepaid insurance debtor 1650. Prepaid rent debtor 3000. Supplies on hand debtor 1020. Office equipment debtor 9300. Accumulated depreciation account credit 500. Accounts payable account credit 1000. Outstanding salaries credit 20. John Adams capital 20,250. Unearned income 1000 credit. Retained earnings credit 5325. Total debits in the post closing trial balance is 28,095 and total credits on the post closing trial balance is 28,095.